The insurance sector has seen a sea of changes in the last year or so since Mr. Devashish Panda took over as the chairman of IRDI. To talk about these changes and the company's performance in general, we have with us Mr. Mahesh Balasubramanian, Managing Director of Kotak Life Insurance. Welcome to the show.
Hi, Subrata.
I'd like to start off with the question that how has the company done in FY23 in business terms?
Well, YTD February numbers are available in the public domain. I think one of the goals we had set for ourselves in the beginning of last year is to grow more than the average of the industry. I remember having a chat with you as well sometime mid-year last year, and I said that this is one of the aspirations of the company. I think YTD February, we are well on course to grow faster than the average of the industry. March numbers are yet to come in, but I'm pretty much sure that we should definitely be on course to grow beyond the industry, because March, I'm sure, has been a big month for most players, thanks to the normal March being a seasonal high, and the 5 lakh plus segment got into action because of the tax arbitrage, right? So we'll have to wait for the March numbers, but I'm hopeful that Kotak Life would continue to be among the top growing players in the industry.
You mentioned about the high value policies. So in February and March, did we see any impact of the decision of the government? Was there a pickup in
sales? Sometime in the middle of March, I think the entire industry could see the customers really, because so far before that, I think people were getting aware of it, but there is always a gap between awareness and the action, and inertia normally is a period where people go through that inertia. I think by March 15th, one could see the tailwinds coming in because of this. And I'm sure when you see the final industry numbers, that tailwind will be visible. Because this March would be bigger than any other March that the industry has seen. As I said, March is always a cyclically high month, but I think year on year for the month of March, I think the numbers will look definitely better.
So we are 15 days into this new financial year, and the decision to tax high value policies has started. So are you seeing any impact of this?
Too early, Subrat, but too early to say this. But will there be an impact? Answer is yes. There is no doubt about it. Because if the impact was not there, then March would not have been such a big month, right? So obviously, customers who wanted to avail of those tax benefits have availed. So therefore, since it was a one-time tax benefit window available to them, I think most of them who would have availed it have done it, right? So will this have an impact on the industry in terms of 5 lakh plus the same customers looking at this product category differently? Answer is yes. But as I said, too early. There is still 12 months or 11 and a half months left in the year. I'm sure all of us will bring in now where our thinking caps as an industry and see how better can we attract this segment. Because the same thing happened in the unit linked, and I don't think unit linked created such a big dent, right? But yeah, we're also cognizant that non-par is a driver for this segment, and non-par did offer guaranteed returns. So my feeling is there will be an impact. How much that impact is for all of us to sit down together as an industry and as individual players, improve our value propositions, enhance our propositions for the customer, make them look at this segment from a different perspective, more from a protection perspective, etc. And so that we are able to make sure that the same 5 lakh plus customers who today went in for a particular reason of tax would probably have other reasons to buy policies from us.
Yeah, I was coming to that question. I mean, is there a plan as a company that you have to offset the impact of this decision?
All of us do have plans. Too early to the day to say what will happen, how it will happen, etc. But I'm sure all of us are thinking, how do we really address the proposition of 5 lakh plus in a different manner? There are other products, as I said, there is a term insurance, there is unit link, there are so many other products that we have. And our par segment is also quite powerful. Non-par also, please understand, is at we are at the peak of interest rates. Right. So it's not that the non-par proposition will lose its value suddenly because the interest rates are at its peak. So whoever wants to avail of the higher interest rates will also be attracted towards this segment, even though the taxation dispensation will be different. So all of us are looking at this segment from various dimensions. I'm sure along the year you will see how we are all addressing this.
Also, is there a plan to move into the hinterland now? Because perhaps it was the urban centers where we saw the high value policies being sold. So as a company, would you look to move into
We've already been expanding our distribution consistently. In fact, ever since for this calendar year, I'm saying Jan to December of last year, and if I take from Jan to March of this year, would be about 15 months. I think Kotak Life itself would have done close to about 55 to 58 new branches we would have launched, And many of these branches are coming in the non-top 8 cities, I would say, right? We all know the top 8 cities carry a lot of weight in the Indian market, right? So we have been launching a lot of branches in the non-top 8 segments. Not that we are ignoring top 8. Top 8 also we are adding, but more proportion of branches have come from the non-top 8. So I think that, again, this year, we do have plans of launching another 40 odd branches, 45 branches to be precise is what we are planning to do this year if other things given. So that again will come through a combination of tier 2, tier 3 and tier 1, right? So I think the physical footprint expansion is happening, and many players have also added branches in the last 2-3 years. So I think, see, what's happening is the agency business is becoming more and more viable now, and agency business is a focus area for many players. Traditionally, Kotak Life has always been strong in the agency business. Even though we have Kotak Mahindra name attached to ourselves, we are actually probably more diversified than more players in terms of channels. We are more balanced with almost more than 50% of our business, 48 to 50% of our business is actually coming from non-bank assurance channels, right? So we have been focused on the agency business for quite some time. And I think many of the industry players are also expanding on the agency side. Agency requires branches, but they're all planning to increase our digital business. Agency business is a lot of phygital, and for which you need branches.
We saw the new commission and expense of management guidelines come in towards the end of March. Firstly, I would like to understand what do you make of these regulations and how this will impact the sector and your company?
I think it's a landmark legislation. That's something that the industry has been speaking about it for a long period of time, because and the regulator, we thank the regulator because they're increasingly moving towards a principle-based regulation rather than rule-based. And the logic from the regulator side also seems to be we are a mature market now. 20 years insurance companies have been around and we are quite settled as a market. So time to move to the next level of regulatory evolution, I would say, where I think the regulator is saying, okay, now we are a slightly more mature market. There are enough players. Let's give more room for the individual companies and the boards to decide and move towards a market-led behavior rather than regulator administering the commission rates, etc. So I think it speaks of the majority of the market we are moving towards to. Number two, I think anything which is allows a free market principle to apply or a flexibility to apply has its advantages, because a one-size-fits-all approach normally comes with its own handicap of not being able to do certain things which you would do based on market, geography, segments, products, channels, etc. Right? I think that freeing up of the regulation helps companies now to apply their mind and do what is relevant for their business, both in terms of their own stage of evolution plus the dynamics of the various channels, etc.
Many analysts have said that these expense of management and commission regulations would place the non-listed players at an advantage, because the fact that they don't have to disclose margins and return on embedded value, they can possibly give higher commissions, and there could be a commission war between the listed and the unlisted players. What would be your take on that?
Honestly speaking, I don't know where that thought process comes from. Shareholders are shareholders, whether you're listed or not. They would like the company to be run in a particular manner, and they would like the company to actually do business in an economical way, right? Number one. Number two, as far as non-listed companies sharing margins, I'm sorry, Kotak Mahindra Life Insurance is non-listed. You can go and see our annual results. Margins have been published for a long period of time, right? So these two will, first of all, set the record straight that I don't think listed, unlisted has got any arbitrage from a listing, unlisting perspective. Arbitrage is for good practices. Arbitrage is for good products. Arbitrage is for good market conduct. Arbitrage is for economies of scale, etc. Right? So I don't think listed, unlisted is an arbitrage to put your this thing on and saying that listed companies will be under pressure. Unlisted, because you're not listed, you're not under pressure. I can tell you as CEO of Kotak Life, my focus is as much on all the aspects of running a good company, from customer focus to shareholder focus. Yes, it gives us freedom. See, what does this do? Will it increase the total size of the commission? Unlikely, because what has the regulator done? There are enough checks and controls and balances in terms of being linked to expense of management. We should use this opportunity to address one significant problem of the industry: persistency. Right? So now why should renewal commission always be a flat commission determined by what the earlier regime was, right? Good agents should be rewarded for better renewal, because better renewal means better persistency and better value for our customers and shareholders, right? Structurally, these are the things which could change. Somebody else could pay more on renewal. Somebody else could pay, okay, I'll pay more for effort that you put in. I'll pay more for staying with me for a longer period of time, right? So those flexibilities will bring in a certain amount of dynamism in the way we do things.
We're talking about the conference earlier. I mean, the chairman said that existing companies should perhaps go back to their boards and ask for more capital because they need to grow faster. Is that something that you would do in the future?
Grow faster, yes. Capital based on whether I need capital or not to grow. As of now, I think we are adequately capitalized. Our solvency ratios would be anywhere between 2.75 to 2.8. That gives us tremendous headroom for expansion, right? So faster growth aspirations, completely yes. Capital requirement, as and when the capital is required. As I said, we come from the illustrious Kotak Mahindra group. Our own solvency margins are pretty high, and the group is always invested wherever they have found value. And I'm sure that when the need arises, we'll certainly put in more capital.
There were aspirational targets that the chairman had prescribed to the companies. And in the conference also, he was saying that perhaps the targets were not met in that sense. So would you be able to say, tell us that if Kotak Life has achieved those aspirational targets, or has it fallen short?
Let me put it this way. I think this year has been a good year for most of the players in the industry. And I think all of us have done better than what we thought we'll do in the beginning of the year, right? In that sense, overall industry growth rate has been quite robust. As I said, I'm taking YTD February because March numbers are yet to come. Maybe as you take this interview live, March numbers would have come. And Subrata, you track it more than anybody else. You're the first one to publish it the next day morning after the results come. But I think overall, it's definitely going to be a better year, right? And as I said, those aspirational targets have really triggered the industry's imagination in terms of putting the industry on a higher level of growth. And all of us are working towards meeting our respective ambitions. We have a board, we have business plans, we have IRDA's aspirational targets. So all these are drivers in our business plans, and we're all happy to keep moving forward and growing at a brisk pace. Right? But yeah, exactly how much is it for each company? I think it has a combination of, for instance, renewal. If you are coming from a large renewal book, then that makes a difference. Some people who do not have a large renewal book, to expect them to grow renewal quickly, it's not going to happen, right? So similarly, when you grow your new business very fast, the renewal will take time to catch up, right? But I think what is important is the directional leadership that the regulator is showing here, saying, look here, guys, I want you to get aggressive. I want you to put in capital. I want you to grow. 2047 insurance for all. It's only triggering ambitions and triggering inspiration, right? And I think directionally, all of us are absolutely in sync with that, and we are moving in the direction.
That's all, sir. Thank you so much for your time.
Thank you, Subrata.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.